Welcome to our comprehensive guide on the personal loan application process in the U.S. Securing a personal loan can provide necessary funds for various needs, but navigating the application can be complex. In this video, we'll take you step by step through the journey, ensuring you're prepared for a successful application. Let's start with the basics. A personal loan is typically an unsecured installment loan, meaning it doesn't require collateral, and you repay a fixed amount over a set period. It's useful for consolidating debt, major purchases, or unexpected expenses. The entire process breaks down into 3 phases: preparation, finding a lender, and formal application. Understanding this roadmap is key to moving forward efficiently. The first and most critical phase is preparation. Lenders assess risk, and being prepared means presenting the best financial picture possible. Start by checking your credit score and report. Your score heavily influences your eligibility and interest rate. Review your report for errors and address them before applying. Next, determine exactly how much you need and for what purpose. Only borrow what you absolutely require, and having a clear plan helps demonstrate responsibility to lenders. Gather all necessary documents: government-issued ID, proof of income like pay stubs or tax returns, and possibly utility bills for address verification. The more organized you are, the faster the process. With your paperwork ready, it's time to find the right lender. This search phase is crucial for securing the best term. Lenders fall into categories: traditional banks and credit unions, which offer personal service, and online lenders, known for speed and convenience. Each has different requirements and rates. Compare the annual percentage rates, or APRs, including fees, origination charges, and penalties. A lower APR means less total cost over the life of the loan. Many lenders offer pre-qualification, which gives you an estimated rate using a soft credit check that doesn't impact your score. Use this tool to quickly narrow down your option. Once you've chosen a lender, you enter the formal application phase. This is where the loan decision is ultimately made. Submit the official application form, providing all requested personal and financial details. Accuracy is critical here. Any inconsistencies can delay or derail your approval. The lender will conduct a detailed underwriting process, including a hard credit inquiry, which temporarily lowers your score by a few points. They verify your income, debt-to-income ratio, and overall risk. Be patient during the waiting period. Underwriting can take a few days to a week. The lender may contact you if they need additional documents or clarification. Congratulations, you've been approved. The final phase involves signing the agreement and receiving your funds. Carefully review the loan agreement, focusing on the interest rate, monthly payment schedule, and any prepayment penalties. Sign only when you fully understand all terms and conditions. Once signed, the funds will be dispersed. This can take anywhere from 1 business day to a week, depending on the lender and transfer method. That wraps up the personal loan application process. We hope this roadmap empowers you to approach your next loan with confidence. Remember, preparation, comparison shopping, and thorough review of the documents are the keys to a successful, affordable personal loan application. Finally, make sure you budget for and commit to responsible repayment. Missing payments can severely damage your credit score and financial future.